where and how to find your potential investors, how to build trust in order to actually convert conversation into a check, what strategy to choose when you are raising a fund, and how to raise capital for a startup. This and many more amazing questions will be answered in the interview today with Robert Hutchins. I'm Anastasia Rivodeaux, Managing Partner of Get Funded Tools, and welcome to Get Funded Show. Hi, everybody. Welcome to Get Funded Show. We have Robert Hutchins here today with Ellavoz. And Robert has very, very interesting professional background and his story, how he ended up in raising impact capital. So, Robert, first of all, welcome. And I would love to hear, how did you end up in such an interesting position as you are right now?
Oh, geez. Well, that's going to take some time, Anastasia. First, thank you for inviting me to join you on this. My background comes from as a certified public accountant with a heavy tax, both estate and income tax planning strategy background. And so I work with high net worth individuals in tax strategies that included fiscal policy incentives of Internal Revenue Code tax incentives, credits, as well as I had a social entrepreneurship sideline in developing and operating residential healthcare facility for very low income, seriously mentally ill adults, and other not-for-profits that I gained some insight into the terrible shortage of affordable housing and special needs housing for vulnerable populations.
Wow. So basically where you are right now in your career is the combination of two backgrounds, working a lot with money and then working a lot with social capital and making good in the world.
Exactly. What we're doing here at Ellavoz Impact Capital is we created an entirely new asset class. And that asset class is based on some of the work of Professor Michael Porter of Harvard in his shared values investment strategy, which says that capital should flow to where society needs it the most, and investors should be compensated on a risk-adjusted basis for that investment. So instead of the government taxing private wealth and then trickling a percentage of that into grants and social programs and other fiscal policy programs, what we wanted to do was create a direct investment vehicle, low fees, no carried interest, that provided for ultra high and high net worth individuals to directly invest in distressed community redevelopment and economic opportunity. So we specialize in high impact investing, and our Ellavoz Impact Angel Network are made up of ultra high net worth families who are putting a portion of their portfolios, particularly the alternative investment portfolios, into our high impact investments.
I love that you're using the word impact a lot. I think it became a buzzword and a lot of people start getting almost like a tree hugging feeling from it. So I'm really curious, since you're working with high net worth individuals and family offices, a while ago, I've done research on my LinkedIn profile, and I've asked which generation do you think is the most resistant to a positive change and to invest in an impact? And 70% of people voted for generation of boomers. And I assume this is the generation that you are working with the most. So I'm really curious, how can you sell impact to this generation?
You know, it's a great question. You can't sell impact. At least we don't think we can. An investor in our fund is our customer. And our job is to solve their problem, not for them to solve our perceived problems. If we are obsessed with building affordable housing, that's our obsession, it's not their obsession. And I can't sell them an obsession. I can certainly educate them on the need for affordability and dignified housing and how it benefits society as a whole, and will help to build a greater and more sustainable economy. But I can't sell impact. And this situation makes us really a very niche asset class. And that's okay, because we are the best solution in our niche. We provide a transparent entry to high impact projects that investors can see and talk. They can drive there if they want. But these investors have already made the decision to allocate a portion of their portfolio to this new asset class. Interesting enough, a lot of these ultra high net worth individuals are reluctant to pay higher taxes because they see government as a wasteful execution of policy. But they are not reluctant to directly invest through our asset class because they can see that 99 cents out of a dollar goes directly to the impact project that we've chosen. We stay focused, and we're very focused on sustainable community development. We rely on the United Nations Sustainable Development Goals, number 11, sustainable communities. We want to build long-term community relationships, dignified housing, with the applicable outcome target of safe and affordable housing. We measure our goals qualitatively and quantitatively. Qualitatively with the impact reporting and investment standards, IRIS, you might have heard of that, which has a specific tool to track quality affordable housing. So we make our impact investments very measurable, and we make ourselves very accountable to these ultra high net worth families that want this type of investment. That makes us very different than most of what the so-called ESG mutual funds, which I sarcastically joke, do you want the blue one or do you want the green one? One fixes the water and one fixes the sky. I don't call that high impact. That's like touchy-feely good impact. We measure goals quantitatively with the Global Impact Investment Rating System, which is one of the most standardized rating systems actually developed by Warren Buffett's grandson, Howard Buffett, a Columbia University professor. And finally, and really our strictest critic is ourselves. We measure our success against our own and our not-for-profit stakeholder partners in all the communities that we invest in. One of our unique selling points, I guess, in selling impact is our partners are the largest not-for-profit affordable housing developer in New Jersey, which does work in New Jersey, Florida, New York, and other states. And our other partner is the largest community development financing institution, which is essentially a not-for-profit bank that specializes in distressed community redevelopment. And they've been doing that successfully for 34 years. They have over $500 million in assets under management. So we pick very strong partners who can provide a wealth of tools, economic development tools, to assist us and our investors in making good choices and solid investments. And then we go out and look for local not-for-profit organizations that are stakeholders in their individual communities. When we walk a community, that's our initial due diligence. We walk around the community. We look to see what not-for-profits are providing essential services, whether it be healthcare, education, etc. And we look to partner with them, give them reduced or free space within our projects to provide services or amenities, we like to talk to them, call them, to our residents. Because with this outreach, we're able to really value add to our residents the services they're getting beyond housing. We also reach out to our healthy environment goals, which when we acquire a piece of property for renovation, we remove all the lead, we clean up the HVAC systems, there's no asbestos. So we're working on healthy communities, we're working on dignified communities with opportunities for economic growth as well as for eventual ownership. So we sell impact to impact investors. We sell our particular style of impact and our asset class to defined impact investors.
I have so many questions. You said such an incredible golden nugget. You said if we are obsessed with this problem, this is our obsession. And I see that a lot with especially first-time fund managers. You know, they have a passion towards a specific problem in the world. And, you know, a lot of them are young, so they're just starting. They don't really have a network of investors. And it looks like you're in a very unique position as a fund manager because you've had your CPA practice for years. And a lot of these people, I assume, are now your investors in the fund. How would you advise to a young fund manager to go about finding their LPs?
Boy, well, let me say that I'm not sure I could advise a young fund manager. It's a great question. And I especially for a new asset class fund manager like us, but we are first and foremost financial advisors. We are, we have CPAs here, we have attorneys. So we are first and foremost advisors to sophisticated social impact and ultra high net worth families that want to use or take advantage of the opportunity zone tax benefits. Because we are a firm of professionals, we bring this trusted advisor credibility to our investor network. I think to a young fund manager, they need to establish that credibility. And that credibility is not established in selling membership interest in a fund. That credibility is who you are, your authenticity, what you've done before, what's your story, what's your backstory, right? When I talk to investors, I mention the fact that I've had extensive not-for-profit leadership volunteer positions from local to national levels. That 27 years ago, I established a residential healthcare facility that nobody ever thought we could do it. About 15 years ago, we got a national award as the best residential healthcare facility in the country at the Alliance for the Mentally Ill convention in Chicago. Here in New Jersey, over the last 18 months, every nursing home, residential healthcare facility in New Jersey has suffered from COVID-19 pandemic outbreaks. Ours is the only facility in the state that has had zero COVID-19 outbreaks among our residents. So I can bring this backstory of service that gives me credibility. It's really hard. It's not a lot of jazz and smoke and mirrors. It's really having done the work, having been there before, and telling your backstory, being authentic, being, frankly, sharing your personal story. That, I think, is what brings investors to you, because that builds trust. And trust is the most important thing. The fact that we have a very low fee schedule and a direct investment means that we're basically, we invest alongside our partners. Means that, you know, if they don't make money, we don't make money. And so the makeup of our team is very professional. It's just more like a professional firm. And people have a higher degree of comfort when they have, it's made up of a couple of attorneys, a couple of CPAs, some compliance people. We also have the ability to source deals. We do due diligence, transaction negotiation, monitoring. We're prepared for the exits. You know, all the members of our team have this experience that is essential to this particular asset class. So my advice to young, new fund managers is it's going to be very difficult. And that maybe they need to even have some experience with other funds first, develop a network. Cold calling doesn't work anymore. People don't even, first of all, nobody picks it up. They don't even put phone calls on websites anymore. I'm the only guy that has his cell phone on my website, and you can call me anytime and I'll pick it up and talk to you about opportunity zones, etc. So you're more likely than not, you're going to do a small raise. You'll do $500,000 or $1 million, and probably most of it will come from one family that has faith in you, that knows your family, and that's a start. And I think it's a long process. I fortunately, and my colleagues here, leverage our long careers in law and taxation and accounting and finance and entrepreneurship. So we started, even though we're a new fund manager with a brand new asset class no one's ever done before, we bring with ourselves this trusted advisor network. So I think we have a little bit of a head start that way.
Wow, you mentioned that one of the most important things to build is trust, and the tools to build it is credibility and authenticity. And it is so true that when it's your first fund and you don't have an extensive career, it's really hard. And I like what you mentioned, that you just have to do the work. I think it's the opposite of the famous Silicon Valley, fake it until you make it. Like, instead of faking it, just make it. That's all, just make it.
You know, I'm sure, Anna, you've heard of minimal viable product.
Of
I've
course.
had a lot of entrepreneurial experience, and I happen to like that particular strategy. I've had we built a successful bioinformatics company and other things. That minimum viable product even applies to every industry, even fund management. You know, do a small fund, do any kind of a fund, and see if it works. See if in fact the targeted returns are there. Negotiate your preferred equity distributions. Get your documents together. So you're going to lose money on your first fund, and you'll probably lose money on your second fund. But you create the prototype then, and you have something to prove and say, hey, here's my history. Even though I didn't raise a lot of money, I'm successful in what I'm doing. And so then the next fund will be the fund that gets you to your assets under management, which will come to break even. And of course, after that, you scale very handsomely.
So let's talk a little bit about, I really like that we're getting into the practicalities of starting a fund and getting interest or trust of your investors. Let's say that, you're starting a fund, you've maybe done some small SPVs before, or you've had some investment background, and you've raised from your friends, and now you really want to tap into the family offices network, but you don't really have these relationships yet. And as you said, cold calling doesn't work. What would you say works?
I always said that I have a friend who knows somebody. And so LinkedIn is a wonderful tool for making a friendship. We are now friends. And I may find, if I go into the Sales Navigator or your profile, that we have a mutual connection that I would like to meet, and and vice versa, of course, Anna, is, hey, can you give me a warmer introduction? This is something I did for 35 years as a managing partner of my own two-office CPA firm, and later on as a member of the top 25 CPA firms in the country, is to reach out to colleagues who I knew someone else and ask for an introduction. And because over a long period of time, and I developed a trusted advisor role with the person I asked that favor of, I got that very, very quick trust relationship with the introduction. And so that's the way to do it. It's slow and grinding, and you have that 15-minute call where you kind of just talk about who you are, like we did the first time. And so I find that is the only way to do it. We work with some banks because we have a tremendous asset class for banks, because they're all CRA eligible. So they have a double bottom line benefit. We talk to some foundations because we have program related investments that give them a double bottom line benefit. But a cold call is very difficult. So we need to get a intermediary or somebody with our partners over at New Jersey Community Capital who are more wired into the banks and foundations to make a call and say, hey, these are our partners in our social impact fund and into our opportunity zone fund. And so my best advice I can give to you and your listeners, your audience, is to develop that one-off. 2 degrees of separation is very powerful if you stick with it.
I love that you're saying that. This is exactly what we do at Get Funded Tools. We help to tap into the power of the network. And I tend to see that this is the most effective strategy when it comes to fundraising. I recently received a presentation from one of the companies on the market that is doing fundraising help. And it's the team of 20 Indian guys that are just blasting out the whole LinkedIn with your investment proposition. I'm like, I'm not sure this is the most effective strategy, but just the cold emailing, cold calling, I do think it actually breaks the trust, because when somebody receives a robotic message, they would already be reluctant towards taking a call after that, even if it's going to come from a warmer source.
Absolutely agree. I don't expect that we'll ever be an offering for mass targets. I think we'll always be a very focused niche, a very powerful niche, and we will build our brand among a small niche who are enthusiasts and champions for impact investing, and that's what will make us successful. Not to be an item on a platform that is continuously annoying my inbox. So you and I are 100% in agreement with that.
Yes, absolutely. Robert, thank you so much for this interview. Your true inspiration, your patience, your wisdom, your approach to being open and honest and authentic. I mean, for me, somebody who is spent much less time in this industry, you're honestly a true role model. And I'm sure as to our listeners and people who are watching this on YouTube as well. So is there any way if they can reach out to you, and if they have a question, do you have any open channel where you wouldn't feel too bothered?
Absolutely. If you go to our website, www.ellavoz, ELLAVOZ.com, contact information, my phone call, phone number, more about what we do, our 4 different funds that the 2 deals we finished already and the 2 that are open now. There's a little video there that I think is pretty cool on legacy investing and how to become an impact angel. I think our website is a great source for some information. Email me at robert@ellavoz.com and I'll be glad to send you some information and we can have a chat. And I welcome people who see our mission and think that shared values investing has a great future to correct a lot of injustice as well as the decline in our urban cities.
Wow, thank you so much for this interview. And I'm looking forward to connecting on this topic more in the future.
Terrific. Thank you so much.
If you like this video, please give us a thumbs up or a comment below. It would really support us in building this channel. I really appreciate your time and being here with us today. If you need any assistance or you have questions about raising capital for the startup or for the fund, go to getfundedtools.com and apply for a call with me or my partners. We would love to help you.